Hey, it's Mack with PriceActionTradingSystem.com, and it's Monday. It's February 9th. This will be our chart lesson for today, and really good trading day. It was just a tight range really, but the trend was real clear up and down both ways. Uh, Everything for the most part followed the price action rules. So really good trading day if you followed the rules. And it never fails that I people really struggle with ranges. And just like today, I had a guy send me an email, and he actually sent me this over the weekend, but I didn't get a chance to see it till today. And it had to do with ranges. And he's like, I still not sure I completely understand what to do at ranges. Well, the idea is you get a trend. You'll generally, if the range is big enough, you should have room to get a trend between both sides of the range. And so what you want to do is once it starts trending up, you want to follow the trend rules till you get to the top. Just don't take anything too close to the top. And once it reverses, you want to follow the trend on the way down and follow the trend rules in between. When it gets to either side, look for follow the rules for buying the top, selling the top of the range or buying the low of the range. There really wasn't a bias in this today. We traded down into this, so you'd think the bias would probably be short, and it did turn out to be short in the end because we ended up going lower, and that's generally the rule. Um, and one thing you would have looked for is I would have called that the first leg. And so once we broke lower and started going lower, look for that to be your target. And you can see that we got that to the tick, to the very tick, and then it reversed. Doesn't get much easier than that. So the idea is, yeah, when you've got a, a channel, even though if you're trending down, follow the trend rules on the way down. Then when it reverses, follow the trend rules on the way up. You can see we were trading down. We got a break here, a couple of legs to a new low, and this leg right here is this is a measured leg to that one, and then it reversed, and we're trading up. And I haven't measured these, but I'm just can tell by looking at them. There's your first leg up, and I'm guessing the next leg's pretty close to a measured leg. We missed it by a tick or so. And then you're coming down. You got a channel break, a couple of legs to a new low. Let's just see if there's your first leg down. And so when we started for leg two, you do that perfect measured move again. And then it reverses. And now you're heading up. You get your break, a move to a new high, and then we're headed down. We're moving down. You get your break, move to a new low, and then it reverses. So, you know, don't try to complicate it too much. That's what most people do. They complicate it considerably more than they should. They're thinking too much. Just understand that when you bounce off the lows, then you're going to the highs. And when you bounce off the highs, then you're going to the lows. And early on, this should have been your first high because uh, that's where we opened. That was the overnight high. So that should have been your first. We broke through it once and we tested it a couple of times. We barely got through it, and we went through it again, but we never could mount anything above it. Everything's, we broke through, but that was it. And so it was pretty obvious where the resistance was right across there. And early on, I had my line down here. But when we started bouncing across here, I tried it right in here, and then eventually I moved it down. And in the end, I think it was right across there where I moved it up to the first time. And you can see we broke through there a few times, but most of your bounces came from right across there. And so that's where you want to have your line. That's where but these lines can move around a point or two or three in any direction all day long. In the end, late in the afternoon, you probably would have moved it back down here to this area because that's where it bounced, and look for it to do something when it gets there again. And look, we shot through, but it came back, and then it ended up doing a breakout, pull back short, and going lower. So, adjust your price action as you need to. But that gives you wherever this line was when I had it up to here. I was looking for that for a possible target when we came back, and look where we bounced. We end up pushing through, but just momentarily, then it goes back. And there's really a long right there. I probably should have it circled at least green. I'll go ahead and put it there. But that's what I saw today. So I'm going to leave my line right across there because that holds most of the price action. 90% of it, I guess, for the day. And let's back out and talk about the trades now. A lot of them today. The first one I saw, obviously, you got your break here. You come down, you make a double bottom, you pull back, and you break through that double bottom and turn up. There's a trap. That's a second entry long. This was a couple of ticks off its low, so I did make it green. You're usually better off to wait. But these traps are very powerful, and if you can catch one, get it. And then it kind of pulls back and gives you, it never breaks lower, so it's a questionable second entry, but it is a second entry. But when it made a little lower high here and went higher again, I really liked it there. So this circle really is for both of those. And if you didn't enter one, you probably should have entered the other. It's still a little bit aggressive because it's not a perfect setup. You didn't get a break lower. There is a little pullback there, and if you went to another chart, you'd see a second entry clear one, but it's a little more advanced. So, and then you pull back, first entry, pull back. There's a second entry long right there. I marked that one. It's not a perfect setup bar, so I marked it green, but it's real. It's borderline being a nice second entry. If you took it, doesn't matter. It worked. You probably had to have your stop below the signal bar, but it worked. And so it's borderline being blue, and then it pulls back and gives you a second entry long. This is, again, it doesn't quite close on its high. You might have thought about using a limit order. Let me get this out of the way. But, I mean, that could have easily closed green just as easy as it did red because that's right there where it's ticking back and forth. And it did pull back. So I like it either way. Blue, it's real close. You might have used a limit order, but even if you didn't, it tried to come back and it ticks lower, and then you get the failed second entry short. Just go long there when that breaks higher. So there's really three setups there, and those are the ones that I'll add on to. If I don't get out of my scalp, I'll add on to them because especially when you get that failed second entry short, you're just about a sure thing at that point because you're looking for a new high anyway. I mean, nothing's a sure thing in this business, but that's about as close to it as you're going to get. And then we pull back. This one was, this is a nice reversal bar, and all we did was test that line again. So what was resistance is acting as support, and there's like a double test of that. We actually made a low, and then we double tested it again. And look where it closes, way up here. And again, that one could have been green. I liked using the limit order here. I went back and forth about whether or not to make this one green, but I just think you almost have to take that one. And you're looking for a measured move. If it starts working higher, you're looking for a move like that right there. And you can see we actually went higher than that. The clue is this is the next resistance, and you got plenty of room to get out before then. So I like that trade. And then it pulls back and gives you a second entry right there, and you still got room, so I like going long again. And so this is really your first close outside this trend line. All of this, notice, even though it got down there, it never could close. That's another reason I like that one. I didn't talk about that a minute ago. It never could. This trend line is just a hair lower there. It never could close. Look how it closes inside there every time. That's a good sign. There's nothing down here but stems are green. So that's a good sign, and this is the first break. And then you get two measured legs up, and it's actually, it looks like a measured leg. Did I measure that a minute ago? There's leg one, and there's leg two. Well, we missed it by a tick or so. Maybe I was measuring that one and looking for that again. But here's your break and your two legs up, and then guess what? It reverses. It starts working down, and you get a failed second entry long there. This one I meant to have it green. It's a failed second entry long coming off the highs, but it's a lot of overlap there and a lot of dojis, and it would have worked, but I think it's just a little bit. Look how those bars, and that when I say overlap, and that's what I'm talking about. Look how those bars, most of the each bar is overlapping the previous bar. There's always some overlap, like right here, this bar overlaps here, but you can still see it's kind of trending upwards. This bar and this bar overlap a little bit, but you're still trending higher. It's not trending there. Look, you can see that's obvious. They're just kind of going up and down, up and down. That's what congestion is, and that's what I mean by overlapping bars, because I get that question a lot. But there's a failed second entry long there. It is coming right off that little channel. So there's reasons to take that short. So I'm going to leave that one green, even though it's borderline. It's a trap, and you're looking for prices to go the other side. And then it breaks lower and then turns up, and it tests that. And that's your double test. Notice the high, and you get a little double test of, we actually broke through it there. But you're just coming back and double testing. That's a lower double top than that. It's a big bearish bar. I like that one. It's a first entry, so I did leave it green, but I'll be honest, that's real close, borderline to being red as well. And that was one of your best moves all afternoon. Look at that. You get some runners there. And then it pulls back. You get a second entry short right here. I actually liked going long there because you got your break, a couple of pushes down to a new low. Look at that reversal bar, and then it traps people and turns up. So I liked going long there. If you hadn't been in that long, you might have considered a short here, but I just don't really see a good short setup. It would have worked, but when it turns up here and turns back down, I liked it somewhat then. There's a little bit of a trap. Again, this one I almost wanted to make it green, but you're looking for a measured move like this, and that might have kept you in that trade. And you can see we ended up getting that to the tick. So I like this one for a little bit of a trap there. So I'm going to leave it red. It's real close. And then there's a two-legged pullback with a second entry right there. And another easy scalp, and then it reverses. And I like this one. Look at this is a perfect repeat pattern. Look at that, and then look at this. It's almost a perfect repeat pattern. This is a little smaller and tighter, but it's that same little tick, move lower and traps everybody and turns up below that. Look at that double bottom with that break lower that fails, double bottom, break lower that fails, and we just failed below this bigger double bottom. So, and look at it go. Quick, easy move, and then it pulls back. It doesn't tick lower, but it bounces right off the trend line for a nice second entry. And then it pulls back to the trend line, does it again, gives you a failed second entry short. Just go long right there, and that turns out to be a nice move up. And then, of course, you get to the top, and what does it do? It reverses, pulls back, and you get a failed second entry long there. This is almost a repeat pattern of the one over here before. Where was it? Right here. See all the overlap, and it ticks higher and turns down. It ticks higher and turns down. Except this one, you get a little more movement to the side, but it's still a failed second entry long, and you're looking for prices to come to the other side. Nice easy scalp, then it bounces again, and you might have even thought about taking that short, but with the break of this little channel and a move here, I was afraid we were going to try to go higher, which we ended up doing. But what it is, it turns out there's a trading range across here. Look, there's a few more overlapping bars here than here too. So you get a failed break lower, a failed break higher, then another failed break lower, and we try to push up to a new high. And then, but I just thought once it started swinging back and forth, you were better off. You could have actually taken a long right here. You might have even thought about a short here, but we'd already had the break and the new low. So I'd be more apt to go long right here than I would short right here. But you could have done either one. They're real close. I'm not going to mark them because I think you're better off just to stay out of that. Once you didn't go much lower and you turn back up right there, I think you're better to stay out of that. And just wait and see what happens. It pushes higher. You get a failed break higher again, and it's even went a little bit higher than that when it fails. and it starts working down. First entry long, pull back, second entry long. There's that same pattern again. It turns down. This time you have to ride out a little bit. You might again thought about a limit order here, uh, but if not, you had to ride this one out a little bit, and then you get another chance. And look at that big bearish bar. Let's go short, and that's a nice move right there. It's almost similar to this move, and you can ride that one. Then it comes back, um, gives you a second entry short right here. Notice the new high, pulls back, it tries to go higher again. There's a new low, pull back, first entry, pull back, and that's a big bearish bar. So when it broke lower there, I like that one. Boom. Then it comes back. That's your first break of this big channel, and it gives you a second entry short right there. And that turned out to be a nice move too. So, and that was the last one that took you into the 2 o'clock hour. There was a little bit of a repeat pattern here as there was early on. Forget where it was, but anyway, we saw this little pattern here earlier. Oh, right here. So, if you were still trading right into the 2 o'clock hour, you might have considered that one. I'll go ahead and mark it. And that's what I saw today. So lots of trades today, lots of opportunities to make money. And you only had to get, 2 or 3 of the best ones of one of these. And that's what I always tell people. Don't force and try to take a lot of trades. You don't need to make but 3 to 5 trades every day, and get a piece of each one of those moves, and you'll do pretty good. If you're just trying to learn and you want to keep trading every day, that's fine. But once you go live, you don't need but a couple of the 3 or 4 of the best trades every day, and you'll do well. But I also wanted to say, we've had a lot of conversation lately about sim trading. So I did do a chart lesson, or I'm sorry, not a chart lesson, but a video lesson that I posted to the website. I'll probably post a little later tonight. So be on the lookout for that, and maybe that'll answer some questions on that. Just briefly, for those that aren't members that won't be able to see that particular video and lesson. The idea behind sim trading is, sim trading is not exactly the same as trading live, because it is the way it works. It's the exact same. So if you can't make money sim trading, obviously you're not going to make money trading live, because if you can't do it on the sim, why would you be able to do it live? But what a lot of people will say is it's easier to trade sim because I don't have the emotional ties like I do with my real money. And that's true, and I agree with that statement. But two of the things that you need to be able to do while you're sim trading is, one, you need to be able to learn to sim trade exactly like you're going to trade live. And if you're not doing that, then I can tell you when you go live, you're going to make a lot of mental errors, because you're going to try to do silly things that you do when you're sim trading. And the biggest thing is, what a lot of people will try to fool themselves. So don't fool yourself. Don't lie to yourself. Don't try to trick yourself or fool yourself. And what I mean by that is, people will say, I can make money all day long on the sim, but when I go to trade live, I start losing instantly. But if you really dig in and I ask them to send me their trades, they're doubling down. They're doing, they're adding on pullbacks when they would have been stopped out. They aren't trading exactly like they should when they're trading live, and they trade different than they do when they trade live. So if that's why you're having success on the sim, then you're just wasting time, and you're trying to fool yourself. So here's the point I'm trying to make in a nutshell, is what you're supposed to do on the simulator is get on here, trade every day, and trade as much as you can. Don't try to take 2 or 3 trades and quit. Trade as much as you can, because one, you want to get that screen experience, time watching prices. But secondly, where you really get better at trading is not by sim trading, not by even live trading. Trading itself does not make you a whole lot better. What makes you better is trading as much as you can during the day and then studying those trades very closely at the end of the day. That's where the real work starts, is after the trading day. Put your trades on your chart. Mark them if you're using something different than NinjaTrader, and go back and study every trade. Figure out why the losers lost. Figure out why the winners won. Try to do more of the good stuff and try to improve on the bad stuff. That's how you get better. And what you'll start to notice if you do that every day, what you'll start to notice is that it'll start to get easier to spot them on the chart at the end of the day. And at some point, you'll just be able to, I can glance at the chart instantly and know exactly what I did wrong or right. It doesn't take me but a few minutes to go through all these trades, but I've done it every day for years. And so first you'll start to notice it on the chart just at a glance, and you'll get quicker and quicker at it, and you'll get better and better at it. But then all of a sudden you'll start to see it in real time. You'll see these little traps set up, and you'll say, because excuse me, I actually get excited when somebody will send me an email and they'll say, hey, I noticed this in real time today, and they get so excited, and I'm excited for them because suddenly the light flickers a little bit, and then they start to see it more and more, and then suddenly the light gets brighter and goes off, and they're still doesn't mean they're there 100%, but they're really starting to get it, even though they might have thought they were getting it before. When you really get it, you know it, and it's hard to explain that, but when you get there, and I have people send me emails every day, it says, now I understand what you meant. I get it now, and it makes sense. The light went off, and now I understand exactly what you meant when you said, when I get it, I'll know I got it, because now I know I'm starting to understand it. And I know that sounds complicated, like I'm talking in circles there, but it's the truth. And there's no way I can explain it to you. You just have to experience it for yourself. And I know that because I've seen it happen over and over and over. It happened with me. But just to recap this and to cut this short so that I'm not talking forever, is that the idea behind the simulator is so you can study your work, because the actual trading part does not make you better. So I agree with those comments people say that, they do real well on simulator, but then they go live and they don't do so good. But there's also the emotional part of it as well. But if you can't make money on the simulator, there's no way you're going to make money live. So your first step is you got to get on the simulator and trade every day, and then study your work and work towards getting profitable on the simulator. And then when you can do that, at some point you'll have to try to go live, and you'll take a step back, because it will be slightly different. But what you need to try to be able to do is trade exactly live, exactly the same way you were trading on the simulator. And when you're practicing on the simulator, if you can only afford when you're live account to trade one contract, then you need to be trading one contract on the simulator. Don't add on, don't break the rules, and don't fool yourself into thinking that, hey, I can do it on the simulator by doing things that you can't do live. You need to work on, and that's the other part of it, that doing this will help you while you're on the simulator. If you're truly working to try to do it right, you'll start to get to the point where you're reinforcing doing the correct things, and you'll be building correct habits, and you'll be more disciplined by trying to be disciplined on the simulator. So I hope that makes sense, but there will be a lesson for those that are members of the site, and you can go check that out. But that's really it in a nutshell. So there it is for the rest of you as well. But I'm going to wrap this one up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.